Hey everybody, good to be here today. My name is Brent Moore. It's time for market and sector analysis. This is normally Mike Fairborn's class, but I'm sitting in for him today. I'm glad you're here though. Familiar names in the chat, good to see you. And those I'm not familiar with, glad to see you as well. And those of you watching on a recording, that's great too. I'm joined alongside Ms. Connie Hill, who's helping me out in the chat. Connie's a longtime veteran of the markets and very knowledgeable in this. So as you have questions between Connie and myself, we'll do our best to get those answered. You can follow either of us or both of us on X at Brentmore CS, at Connie Hill CS. Today, look, I want to go through the markets. I want to go through different sectors and show you ways to analyze those. So we're going to do that in just one sec. But before I do that, I do need to go through some disclosures here. The information today is for general informational purposes only. It's not a recommendation of any security strategy or chart type. Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money application is provided for educational purposes only. And I may do trades, but they're just examples. They're not recommendations. I'm not going to factor in any commissions. I'm not sure I'm going to be doing options anyway on these, but just be aware of that. All investing involves risk, including risk of loss. So past performance is no guarantee of future results. There we go. What's going on in the markets? Let's see how we're doing. Here's the S&P 500, folks. This is, we're up 0.77% today. I have, just for orientation purposes, I have a 20 and 50-day moving average on my chart. This is the 20-day in red. This is the 50 in blue, and you can see we're actually above both. And, you know, we had a meaningful pullback in the market, I think. And starting in, you know, beginning of December, a lot of times in December, we look for some strength in the market. Well, we really didn't get that. But this breakout does seem to be meaningful here on that, and that's where we are. So, in fact, we're flirting. Well, we barely, I think, broke above our high. So actually that would make that an all-time high today, intraday, on the S&P 500. Okay, so but one thing I think is important to measure here is not just, you know, what the overall index is doing. Yes, this is about 500 stocks here. Oop, let me get rid of that, all that markup there. This is not just, it's, you know, yes, it's 500 stocks, but this is market cap weighted, and so a few stocks can really push this up. So keep this in mind. This is up 0.78% right now. Let's do this. Let's change this, though, to the SPX EW, equal weight SPX. So instead of 0.78 SPX EW, we have down a little bit, actually, on the market. You can see that pullback there. Still, I think, a pretty strong run that we've had, but certainly it gives you a different flavor than what we are seeing on the S&P 500. A lot of times we like to see that breadth. In fact, this morning, I was on a class this morning, and Wiley, who's in our chat with us today, pointed out, hey, look at how many advancers and how many decliners we have on the S&P 500. Well, we can do that. You can go to the Market Watch tab. And by the way, before I get to where I really want to show you here, here's the heat map on this. And you can kind of see, can't you, as you look at this, where's the green and where's the not so green? Well, here we got a lot of green in IT. This is the S&P 500, by the way. Got some green on communication services. Netflix had killer earnings, and Meta's a big mover. A lot of big boxes here, right? The size of the box corresponds to the market cap. So the bigger boxes, those are in green right now. Amazon's in green, but you can see there's a lot of little boxes over here that aren't in green. In fact, this side is more kind of this reddish color, and this is more of the greenish color there. But if you want to quantify that, and this is what I wanted to get to that Wiley mentioned, is if you go to heat map and you go to index watch, and you got to select, here I've selected S&P 500, advancers, decliners, 200 advancers, roughly 200 advancers, roughly 300 decliners in the market. Okay, so overall, the market, the breadth just isn't there. There's other ways to view that, of course, but another thing you can look at is this. Here's the NASDAQ. Here's the NASDAQ. What are we up today? We're up twice what the amount that we're up on the S&P 500. So some of those bigger names, tech names, are really lifting the market here right now. And let me just show you a couple more things, just kind of a quick view of the market here. And then I want to get to a particular topic, namely relative strength, using relative strength in the market here. But you can see the chart on the Russell. Look at the Russell chart versus, well, let me go back to SPX for a sec. You see, there's the SPX. Here's the Russell. Here's small caps. And you can see that pullback. Now, admittedly, again, on this one, we've broken above kind of where the trend would be. So that's nice. But we're nowhere near that all-time high, are we, on that? So we'll have to see some more challenges on that Russell. One challenge on the Russell is interest rates. Interest rates tend to hit the Russell, small caps, harder than they do, harder than large caps typically. Why is that? Well, let me give you two reasons. One, small cap stocks tend to have more debt financing, so higher interest rates make it more difficult for them, and this is obviously related to that. But another reason is, since they have more debt, they're in maybe a little bit less of a financially sound footing. And that makes it difficult if there's more challenges on that. So there we go. Those are small caps there. And just for completeness here, just to look at some other areas of the market, let's look at oil real quick. And then I want to talk about relative strength and then gold. Oil, strong run, pulling back a little bit right now, right? But that really, I mean, oil went from, we were down here in the high 60s, low 70s to up to 80. So that's retracing a little bit there. And finally, gold is showing some strength, not quite at all-time highs, but almost there. If we scroll out on gold, let's go out to, well, let's go a 5-year chart and take a look. You can see the run we've had on gold. That's a big run. Longer term trend is strong on gold. I don't see any chinks in that armor right now in terms of gold, in terms of anything changing here on this. We've had kind of more of a sideways period, but certainly no downward. Now, if we want to look at these stocks, let me just go back. I'll go back to the index for a sec. What we can do is we can compare them to one another. On the chart right now, I have a RSI, okay? RSI stands for relative strength. It's Wilder's RSI. I do not want you to confuse that, because I use this a lot. Other coaches use RSI a lot. A lot of people use RSI. Don't confuse that with just the relative strength. They are different things. Yes, technically the RS and the RSI stands for relative strength, but they're different indicators here. So if you go to your studies and go to RSI, that is one indicator. But if you type in relative strength, that is a different one. Okay, so let me go here, and I'm going to just create a plain chart. And I'm going to pull up relative strength. Okay, here's relative strength. Now, at the risk of confusion, let me just mention, just real quickly, the RSI, which I do not have on my graph right now, tells you essentially where the momentum of the stock is compared to itself. Where is the stock now compared to where it's been? And that can be useful, but it's not what we're going to do right now. Right now, we're looking at the relative strength. Okay. This is taking and comparing the stock or index in this case, and you can use a stock or an index, and comparing it to something else. The default is the SPX. We can change that, and I'll show you how to change that in just a little bit. But basically what it's saying is, how is this performing compared to the index that we're comparing it to? Okay, think of it as a race. Okay, well, look at this line here. This line is showing which is going faster, the whatever we have up here, or the what we're comparing it to, the SPX. If this line is going up, and if you look right here, look right down here, as it's going up, that means whatever is up here, the NDX in this case, is going faster. It's running up faster than than whatever this is. Down during this period, it was actually underperforming the SPX. Now, it's very possible, and I think this is the case, the SPX was also going up during this time period. So it's not whether this is going up or not, it's how they are doing in comparison to one another. Similarly, while this is going down, this means it's underperforming. It's going down more than the SPX was going down. So you can find a period, perhaps, where this goes down and the stock goes up. Why is it going down? Even though the stock is going up or index is going up? Because it's going up less than what we're comparing it to. Okay, so that's how this is. You can see it for the full time span of the graph. In this case, I have 9 months. Doesn't matter what time period you pick. It's going to show you this little red line down here, not the one I'm drawing, but the one I'm kind of putting dots over right now, shows you where you started. At the, looks like early May, maybe April, we started here, and this shows where the SPX it would be on this graph compared to the start. And so this is always going to be, this represents our underlying index. Since we are above that right now, we know that for the last 9 months, we have outperformed the SPX. And that's great. We can change the time frame and look and see different things in a different time frame. So for example, if I were just to change this to a 1 month graph, let's see what this looks like on a 1 month graph here. Let me do, I don't have 1 month. I'm going to have to change this right here. Let's just go to 1 month, click on OK. So which has been stronger over the last month, the NDX or the SPX? Well, the SPX has. Here's the SPX, this red line here. NDX were actually a little bit below that. Okay, now just one other point, and I want to make here on this is that yes, it can tell me on the whole time frame how we're doing. In this case, 6 months. I just changed it to 6 months. But you can also look just visually and say, oh, look, over the last 6 months, yeah, this has outperformed a little bit, but over the last, what, month, it's actually underperformed a little bit. Oh, but before that, it outperformed a little bit. So you can kind of zoom in, if you will, and see it for different time periods. All right. So now let's go to the next step here. We can compare. Let's go out of the indexes and let's look at how different sectors are doing. How about? Okay. So what I'm going to do is I'm going to pull up a graph, a watch list, and I'm going to bring up sectors. So to do that, I can click here to watch list. I'm going to go to public, S&P 500 sectors, indices. And I have a description here to help us out. The symbol itself, if you don't have the description, if you don't add the description column, you just get this, and you probably aren't going to, I don't know what these are, and I've looked at them hundreds of times. So that's why I use the description, okay? But we can see, how's energy doing? I'm not so focused on the last 6 months, although I kind of like to see the bigger chart. I'm focused more here on this part of the graph over here. How have we been doing? Well, it started to look a little bit better, but now it was outperforming actually from kind of Christmas basically until it's pulled back kind of. Well, let's look at some other. How's materials doing? Well, it's starting to show a little life, but nothing super spectacular. For the most part, been doing poor since early December, underperforming the S&P 500, okay? Industrials, well, how are we doing? Well, from here, it started to even out. The last few weeks have been pretty good, though, okay? Have been doing pretty good. So Jay Richardson said, is the comparison study the same as relative strength? The answer is no, it's not the same, but they get at the same thing. If I were to bring up a comparison study, I'm not going to do it right now just for time's sake. What I could do is I could show up here this index. This is our index. This is our industrials index. And if I did a comparison of the S&P 500, I would have a totally separate line on this graph, and it would look, I don't know, something like that, maybe something like that. There's pros and cons to both, right? The comparison study, you can see each day what the SPX is doing, along with each day what this index is doing. But the strength of this relative strength is I can tell which is doing better easily, because what often happens is they're both going up at the same time, or they're both going down at the same time. Yes, of course, it's easy if one's going up and one's going down to see which is stronger. But if they're both going up by a little bit different amounts, this is where you can really see that come to play. So it's a great question, Jay Richardson. Absolutely. Slight difference, though, in what we're doing. Lately, we can see industrials have actually been doing pretty well, okay? This is the cool thing about the relative strength is you can kind of zoom in and just kind of focus on those areas that you want to on that. So let's just kind of put a pin on industrials for 1 sec. We're going to come back to that perhaps, and then come and look at some others there. But let me do this. Let me go down the list here. And, okay, so this is discretionary. This one has actually been showing really strongly lately. By lately, I mean since, I guess, December 17th, we've actually underperformed. Now, for the most part, that's pretty good. I'm going to put a little more emphasis today on the last, say, 3-4 weeks of time frame. And so I'm going to say from here to here, we're underperforming. Maybe I'll pass on that a little bit there, okay? So here is, this is Staples, clearly underperforming the whole way in terms of your sector analysis on this. So right now, my goal, by the way, if I didn't explicitly say so, is let's analyze those sectors that are the stronger sectors right now in the market, okay? Healthcare. Look, healthcare has been going up, but compared to the SPX, not really that much outperformance. Pretty much in line with the SPX. Financials has gotten a little better, a little outperformance there. IT, not so much. Yes, today it's up. Yesterday we had the announcement of the new administration's AI package proposal, and that seemed to boost tech quite a bit. But that's a little shorter term than I want. For the most part, it's actually been underperforming right now. Okay, and communications, same deal. Not really outperforming right now. Communications, I think, got a boost from today, up 1.2% today. I think Netflix certainly helped that out quite a bit. Let's keep on going. Utilities. Well, there's utilities, and actually been doing fairly well. If I were to draw a line here from, what is this, about the 10th of December to now, we've actually been outperforming, even though if you go back farther, not looking so great there. All right. So let's do one more. So utilities, let me just jot utilities down real. Maybe we take another look at that. And look, you may want to look at one that I don't look at. That's fine. I just want to give you the tools to decide. Real estate, not nothing to write home about, right? That's been poor for a while, and it seems to, maybe it's leveled out a little bit in relation. You see that? This has been looking really strong here, but in comparison to the S&P 500, not even, it's nothing spectacular. Okay, so then what do you do with it once you kind of identify your sectors here? Well, let me just show you a couple things. One, you can go to that sector. I'm going to click here, and I'm going to go to by industry, and let's do industrials here to start. I'm going to go to industrials, and I'm going to show, you can go down to a subsector, industry type thing, but I'm going to go to show all industrials, okay? So now what I'm looking at are stocks that are industrial stocks, okay? I have limited my risk, my list. Now, here's the problem. There's a ton of them. There's a ton of them, and a lot of these are like penny stocks or insignificant little stocks. I added a market cap column. It's nothing special. You guys can add it yourself. Go to the little gear. You can customize and add market cap. And so this is one way to do it. Because if you don't do this and narrow it down this way, what's going to happen is you're going to be looking through all these and you're going to go, oh, this looks great. And then you look at it and you go, oh, it's a 3-cent stock. Okay. Now, I don't know. I mean, this could go up. But there's huge, penny stocks are just something I'm not going to teach here just because of the extra risk and volatility on those, okay? So that's the challenge you have on these if you just go to every stock here. But once you add in market cap, you can scroll down and go, look, I only want to go to, I'm going to avoid the NAs, and we're going to go here. So this is in millions of shares. So 200,000 million would be 200 billion. That's a big company, okay? GE Aerospace, big company. Let me click on that, and we can see how that's doing. Oh, that is showing strong, right? Over the last 6 months, it's not done much until early mid-December, but since then, it's been taken off. That's how you can assess their performance in relationship to your underlying index. I can go to Caterpillar, lately looking pretty good. Here's Siemens, looking pretty good. RTX, maybe not as strong as the others, but looking a little bit better here on this. And you can go down the list until you're not comfortable with the market cap. These are all pretty big companies I'm looking at here. Here's Eaton, Honeywell, and so on, Union Pacific. If I increase this a little bit, we can see which has earnings and which doesn't here coming up. So we have a lot of companies with earnings. All right, so let's move on from here, and let me just say this. Another thing you could do, you don't have to do it. I'm not going to do it for the most part, but I want to empower you and show you how to do it, is you can change this index from SPX to something else. Let's say I want to go to industrials. Well, first I need that ticker symbol. So let me go back to industrials so I can remember what it is. So where's industrials? Hold on. There's industrials right here. Okay. I'm going to right click on that, and I'm just going to click on copy. Okay, now I have that ticker. Now if I go here to my studies, notice relative strength, SPX. I can edit it, go to the gear. I can go here, and I'm going to type in that, put in that new symbol. I just copied and pasted it, okay? Click on OK, click on OK, and it didn't change. Hold on, let me try that again. One thing I found on this is sometimes I got to click my Enter key. Oh, crud. I don't know if I did that. Control V, okay. Click my Enter key. That should, I think, have stuck. Okay, apply, okay. There we go. All right. So here we go. Now, why is it a flat line? Why it's a flat line? Because I'm comparing it to itself. I'm comparing industrials to industrials. So there is no. Now the question from RG, what is the red line? That was what I was trying to say earlier, RG, that represents what this is. This is where we started, okay? And this is where we end. And now the red line, which we don't see right now, is this up here at the top of the page, not the red line. The green line is this, whatever we show up there. So let's look at some other sectors, some other areas here in industrials. So I'm going to go back to by industry. I'm going to go to industrials. I'm going to select all industrials, and I can go here. And now I'm not comparing to the S&P 500. I'm comparing to the industrial sector. Compared to the rest of the industrial sector, RTX has been doing great since early December. And you can see that right here. Yeah. What has industrials been doing? This represents industrials. This represents RTX. Okay, so that's an approach you can use on this. Now I'm going to switch back to the SPX here. I'm going to switch back to the SPX because I want to show you another way of doing it. And let me just double check how we're doing okay on time here. Another approach you can use on this is, and this one, let's switch to utilities because we said utilities was looking pretty good there. So let me go to sectors, industries. Here's utilities. We were looking at that and we're saying, well, that's starting to gain some strength here. But what I can do is, this is something I have done that you may consider doing yourself. I went to the Scan tab. Let me just reset this. Okay. Start from scratch here. And I said, look, I get frustrated sometimes when I pull up a sector and it has a ton of stocks in it, a lot of penny stocks in it. I don't want all those stocks. I just want my own watch list for each 11 sectors that is just S&P 500 stocks for that sector. Can I do that? You bet. I can just go up here, scan in, and I'm going to change this public to S&P 500. And I'm going to say intersect with, by industry, utilities, and I'll go select all utilities. Now, if I scan, I have this. Now, that's kind of cumbersome, but you do that one time, and then you save the scan, and then it's saved permanently as a personal watch list for you. I've already have this, so I'm not going to go all the way through doing it, but you click on the little menu, you go Save Scan Query. It's going to say, what do you want to name it? And I'm going to name it S&P 500 Utilities. Okay, there we go. Now, I'm not going to save it because I already have it, as I mentioned, but there you go. And then what happens is you save that one, and then you go, you know what? Stay right here for a sec. I'm going to go to by industry. I'm going to go to healthcare. I'm going to do the same thing. Here's my new scan. These are S&P 500 healthcare stocks. I'm going to save this one. Save Scan Query, S&P 500 healthcare, and so on down the list. How long does it take you? It doesn't take you that long. It takes you probably 30 seconds per thing. So 5 minutes you have permanently, once you save it, you have permanently, when you want to look at them, go to your personal watch list then, and you have them all saved, just like that. Okay? And now when I want to go to utilities, which is what I was looking at, I have my utilities watch list. I don't have to worry about the whole market cap thing because I know these are all in the S&P 500. And now I can go through and click on them. And I can go down the list if I want. And I can see which ones are looking better or not so good. Well, that's looking better here as compared to the relative strength. Now, I can compare that to utilities if I want, but the reality is the ones that are doing best compared to the S&P 500 are going to be doing best compared to the are going to be doing the best compared to the utilities index anyway. So in my mind, it doesn't really matter. It really doesn't matter in that case. So I can go through these and see which ones are outperforming. Oh, look, here's CNP, Centerpoint. This has been actually doing quite well here. And you can see our relative strength since really beginning of November. It's been up and down, but for the most part, we've been outperforming here. If I decide I want to do that, maybe I want to say, well, look, I want to put a stop. I'm going to place example stock trade here. I'm going to go to this stock. I'm going to say, oh, we had a bounce here. I'm going to call that a kind of a support level. If we break below 31, then I want to get out. So we can put a stop on that. We'll go below 31. We'll go to maybe 30.50, about 1% or so, a little bit over 1% below that. And so at 30.50, we can do the trade. And just remember, when we do this, I'm going to buy custom with stop. Here we go. Let me get rid of this column. 100 shares. You can change whatever your quantity you want is. Stop. And we said 30.50 was going to be my stop loss. Now, stops aren't guaranteed, right? This could certainly gap down below 30.50, and we could, if this gaps down to $25 overnight, we'll probably fill around $25. Probably unlikely, but it can happen. You never know. And there we go. And then we can, you can confirm and send. Make sure you read the red info on that. And this is going to be, we'll put that in, and I have that order in. That's actually a limit order. Well, look, I was a little quick to put that in. It has me a limit at 31.71. I'm going to actually tweak this order just a little bit. Working orders. Here it is. I'm going to right click on this, cancel, replace. And then I'll get to your questions here in a sec. Harley, you got a good question on that. And what did I do? Hold on. I clicked on the wrong thing. CNP to open, cancel, replace, or order. I'm just going to make that a market order and get in right now. Okay, there we go. Now we're filled on that. Okay. Okay. It didn't like it because I changed that, and now I've unlinked it. I'm going to have to put in a new stop on that. I'll do that later. Okay. So let's go back to the chart here. So question here is, let me go back and what does the relative strength value mean? It is a comparison. So for the most part, what I would say is this. You can ignore, when you look at these numbers here over here, you can ignore these numbers. They're not going to be useful for you, the actual scale here, because whatever stock you look at, it's going to be a different number there. But what they are is, it's the relative percentage, it's the ratio of the stock and the whatever index you're looking. Oh, Connie just answered. Connie beat me to the punch. Okay. Well, there's a good question for everybody watching even our recording that you can't see. This number is just a ratio of this stock to this index. So since every stock is priced differently, it doesn't really mean that much for our purposes here. So just look at the direction, look at the slope, but don't worry necessarily about that exact number. All right? All right. So let me just let's see. I've got a few minutes. So here I want to talk about a couple more things, but they're quick. And I also want to just mention this. I changed my one order. Okay. On the stock we just did, which was CNP, I changed the order and therefore my stop got canceled. So I'm going to add a new stop on this. So to do that, you can just go to your stock, you can right click on it, create a closing order with stop, and I'm going to make this good till canceled, and I'm going to put that in again. Stops aren't guaranteed. 3050, good till canceled, confirm and send, and send. Now I have that stop in there. Okay? All right. Let's look at, here's your stop. Don't worry about that scale on the right. CRC, it's been trending up as a stock, which is great, but compared to the S&P 500, fallen a little short the last week or so against the S&P 500. All right. So let's go and let's just kind of mention, we talked about the strength of these sectors today. That's really, and relative strength, that's really what I wanted to focus on. Let me just finish up with this. Coming up, we have earnings season coming up. So a lot of these stocks, whatever they're doing, they can change quickly with earnings. Just a reminder, if you go to MarketWatch calendar, I have this S&P 100 in here. You can do whatever you want. You can put in no filter, and it's going to give you more than you want to deal with probably. You can go and put in S&P 500 or something. I'm going to do S&P 100, which those are the biggest companies. And today's the 22nd. So you can see today, yesterday we had Netflix. But look forward, let's look to next week and just see what we have going on next week. Next week, we have Starbucks, RTX we talked about a little bit earlier today, General Dynamics, Meta, Microsoft, Tesla, Caterpillar, Dow, MasterCard, Altria, so UPS, Apple, Intel, we got to, and so on. Okay, you can go down the list here. The point being, the next couple weeks, we've got a lot, especially next week, man. Next week is a powerhouse of stock earnings. So that's going to move the market. That's something that can move the market significantly. All right. Additionally, next week, we have a Fed rate decision, which probably most people think is going to be no decision. They're not going to change anything. But you can always listen, that can move the markets through their commentary, if nothing else. We have GDP next week, and we have PCE, which is an inflation report next week. All those can move the market. So whatever we're looking at here, it can certainly affect that. All right. So I don't know question, what do I expect from tomorrow's jobless claims? I have no idea what's going to come out from tomorrow's jobless claims. What I would say is, of late, what we've had is a relatively strong labor market. Okay. And so that report tomorrow is probably less significant than like the GDP report next week. But if you have, poor labor conditions, then that obviously doesn't bode well for the economy as much. But what it does do is it may give the Fed more future potential ability to be a little bit more dovish in terms of rate hikes. I expect probably no matter what we see tomorrow, it seems unlikely. I'm no expert. It seems unlikely next week's Fed rate decision will be any different. But sometimes that's why you get the bad news is good news situation. In other words, a bad labor report could actually help the market a little bit in terms of how people interpret the potential Fed response to that. So I'm hoping that answers your question there, probability trader. But I don't know what tomorrow's job numbers are going to be any more than you do. So there we go. All right, everybody. Hey, I want to thank you all for joining me. Thank you, Connie, for helping me out in the chat. Make sure you subscribe to the Trader Talks channel. Remember to follow Connie and myself on X at Connie Hill CS, at Brent Moores CS. I think Mike will be back next week for this session, his normal session. But today we've got trading growth and value stocks coming up next. Everybody, have a great rest of the day. Bye-bye, everybody.